Hello, everybody. So, what a stunning announcement from Saylor today. They stacked 1.44 billion US dollars. They stacked cash. And we're going to know why they created this dollar buffer. So, let's go. So, first of all, I'm very happy because my top hypothesis yesterday was that he's going to stack USD to pay the dividends. You could imagine 1 year of USD reserves. He actually stacked 1 year and 9 months, 1 year and 9 months of cash to pay the dividend. The dividend right now, yearly dividend right now that he has to pay is 800 million. So he raised 1.44 billion. So you have over 1 year and a half of cash sitting on the balance sheet earmarked for dividends, which means that if we actually go into a bear market, which we don't know what's going on with Bitcoin right now, but if we go into a bear market, the digital credit story is strengthened because we can weather the storm. We can pay those dividends without having to sell MSTR stock at a discount, without having to sell preferred at a price to par that is too low. We can weather that because we have 1 year and 9 months worth of cash sitting on this balance sheet earmarked to pay the dividend. I think that is a genius idea. In fact, I'm very happy that my top hypothesis was the one that he followed, because that's what I would have done, actually. Yesterday, before I knew this, I told you I would have done that. That's what I would have done. This buffer is great. It's a cash flow buffer. It's a cash flow buffer, just like a household who may have just a little savings account and then they have all of their net worth in Bitcoin. Well, given Bitcoin's valley of despair that it goes through sometimes, unexpected valleys of despair, like the valley of despair we are going through right now in Bitcoin, right? It's a good idea to have a little cash if you have expenses. And now strategy has changed. Strategy is a digital credit story, so now they have expenses. These expenses are the dividends. Note that no ATM whatsoever on the prefs last week. The last 8 days, the ATM was only on MSTR, and that ATM was accretive. I know I'm the only one on this one, but I still think the August move, not ATM below 2.5, I still think that was the wrong move. If he had ATM the whole way, as it was his initial plan, that would have been much better. Because really, the stock last 8 days, the stock didn't do much. It just stayed in the gutter. It didn't really do much at all, and they were able to raise 1.44 billion. So they ATM into the strength. They ATM the common into strength. I'm personally fine with the common ATM as long as it's accretive, and it is accretive right now because they ATM at 1.17. So they posted a video. They posted a video explaining their strategy. So of course, Tom Lee is moving his target for Bitcoin to January 30th. All of the influencers who were promising 150,000 Bitcoin by year end, they're nowhere to be seen. So now Saylor also updated the Bitcoin targets for the year end, and now he's saying it's going to be between 85K and 110K, between 85K and 110K. And the problem is that if you think the max you can get on December 31st on Bitcoin is 110K, the problem with that is that all of your yield assumptions are wrong, because when you publish these yield assumptions, the average analyst target was 150. So all of the analysts were wrong. Everybody was wrong. You can't really predict Bitcoin short term. There's a liquidity problem in the market right now. I don't trust this market a single bit. I don't trust it. To me, there's some issue with liquidity, with the plumbing on the back end, because we've had so many stocks, so many assets with amazing news, and they dumped. Even NVIDIA. NVIDIA's earnings calls, in my view, was like the best earnings call in the history of NVIDIA. They're sold out. The demand is through the roof. What do you see at NVIDIA? If the stock dumped quite a bit, actually. So it makes no sense. This market makes absolutely no sense on the back end. And the market has not made sense for a long time, if you ask me. In the 2020s, the market has made very little sense. So anyways, he had to revise this down because, of course, the target for Bitcoin is not 150 anymore. But he published new charts, of course. 800 million of dividends is what he has to pay. per year, right? So per year. And so that means that not only do you have 74 years of dividend coverage, but now you also have 1.44 billion of cash, which covers your dividend for 1.9 months. So this is an anti-fragile company. If I see one, if you ask me if I see an anti-fragile company, it is MSTR. It is anti-fragile. It now has the cash sitting to pay out the dividends. So, as Fong Li said, over the last 8.5 days, they raised 1.44 billion at an average of 1.17x MNAV, for a USD gain of $207 million. That covers actually 21, I don't know why, did I say less? 21 months. That covers 21 months worth of dividend. Yeah, 1 year and 9 months. That's 21 months. That's amazing, okay? And why did they do it? They did it to increase the creditworthiness of the company. Saylor has mentioned many times, because of the Basel III rules, the rating agencies are valuing their Bitcoin on the balance sheet as zero. The rating agencies are saying the Bitcoin is worth zero. So now he has cash. So now they really can't say that anymore. There's cash sitting on the balance sheet. So I love that. I think it's a very good move for the short run, and especially given the new information that we have, which is Bitcoin's dumping on good news, dumping on bad news, Bitcoin's only dumping. The new information is we may be in a bear market. Given this new information, having cash sitting on the balance sheet to weather the storm for 21 months, well, that's a very good idea if you ask me. And he highlighted some of the numbers. Of course, we have 1.75 years of USD dividends that are stacked, 74 years of Bitcoin dividends that are stacked, but also that base level number that he highlighted, which is very important, which is if Bitcoin trades down to 10,400, that is when they will have less money than they lent, less money than the money that they lent to the converts, less money than the money that they lent via the preferreds. 10,400 is the level that Bitcoin needs to drop. And he mentioned too that if Bitcoin dropped below $10,000, that wouldn't change anything for the business, because it's not like the preferreds are callable. And I guess for the converts it would change. It would change a lot of things for the converts, but the converts we have to worry about in 2028 for 2032. So we still have a lot of time before we worry about the converts. So again, in my view, very anti-fragile company. And then I want to stop on this chart, and this really highlights how Saylor thinks. And Saylor thinks like an engineer. He engineered everything. So he engineered this ship, and the way he thinks, it's very much the same to like a car, for example. I guess a spaceship, right? But that's the crypto reference here. But you have your car. Your car runs with a gasoline engine, and you may know this. Your typical gasoline car, it charges your battery, right? If your battery ever runs out of energy, the gasoline, you run the engine for 15 minutes and it charges the battery. But the battery contains very, very little energy right now. The battery is just enough for start the car, start the radio, but the ship is powered by the fuel, right? The car is powered by the fuel, but the fuel charges the electricity for immediate use and for other types of uses, like running the radio, etc. So this is the whole analogy here. Having a little bit of cash makes sense, so you can weather the storm, so you can weather the storms and pay the dividend whenever Bitcoin is not doing too well. And then he highlights, and this starts with the observation that they were able to raise $1.44 billion worth of cash via the common in 8.5 days. They were able to raise $1.44 billion of cash, and that was 6 basis points. So next to nothing, they tapped into the liquidity. The liquidity, the shares trading hand, the bid, essentially the bid on the shares of MSTR was $3.6 billion. That was the bid. So so he was able to only tap 6 basis points of that bid, is money that came into the MSTR spaceship via the issuance of new shares. But then he goes on further, and he highlights that he doesn't want to sell Bitcoin, but that's an option that the market should consider. if there is any big issue, you can always sell Bitcoin. And Bitcoin, of course, is way, way, way more liquid than MSTR shares. Bitcoin has $50 billion of liquidity a day. 0.4 basis point is all that you would need to touch in order to finance the dividends. Is all that you would need to sell. And then he spent most of the time in that presentation talking about Bitcoin derivatives, specifically naming selling covered calls, but also selling puts. You could also sell puts, but he didn't say that. He said selling covered calls. He said that this is the first time I hear Saylor potentially mentioning casually, well, maybe we're going to sell covered calls. And that if he started using the derivatives to finance that machine, that dividend machine, you would tap $100 billion a day worth of liquidity, worth of bid. Because, of course, the derivatives market built on top of any market tend to be bigger in terms of liquidity. The derivatives are huge. So anyways, he could sell calls. I mean, think about it. He could sell like a 0.05 delta or 0.02 delta on such a huge stack. And if he did that, that'd be enough to cover the dividends. And of course, that's his last resort. And as we've highlighted before on this channel, you also have, I mean, he talks about Bitcoin here, but you can also activate Bitcoin within DeFi, right? You can wrap that Bitcoin and create a pair. You can earn a yield on Bitcoin if you're willing to wrap it. You can use that Bitcoin to create a stable coin. Right. I also think that, after 2030, that's another option for strategy. He could create a stable coin based on the Bitcoin. So the opportunities are endless, frankly. And we get caught by the day-to-day price action. Wall Street gets caught by this day-to-day price action. And yeah, strategy is down today. Strategy is down 11% today. But guess what? Do you know why strategy is down 11% today? It's not the fault of strategy. It's the fault of Bitcoin. Bitcoin is at 83,000. Like Bitcoin is showing huge signs of weakness. We're at 83 as I record this. Bitcoin is down 8% over the last 24 hours. Same market hours, IBIT is down 7%. So of course strategy is down 11%. Right? 1.5x roughly. Strategy amplifies the move. So strategy roughly trades at a 1.5x amplitude to what Bitcoin trades at. So when Bitcoin is down 8% and you have strategy down 11%, unfortunately, I regret to tell you, but that is to be expected. That is to be expected. It's not strategy that's doing very bad. It's Bitcoin that's doing very bad. That's Bitcoin. Bitcoin is the culprit. Bitcoin is doing bad because there's a lot of gamblers who do 50x leverage, 100x leverage on platforms like Hyperliquid or Wintermute or whatever, and then you have market makers who liquidate them, and you have cascading liquidation, and people lose all of their money, and whenever those people lose all of their money because they gambled 100 to 1, that's someone that's never coming back to Bitcoin, and you need to find new liquidity, and this is so unfortunate. We're turning away a lot of younger people from Bitcoin. But those people are attracted to Bitcoin for gambling because they want to do 100x. Anyways, that's why, unfortunately, the Bitcoin price for year end is max 110 per their estimate. But make no mistake, this market is extremely short term. For example, today on the headline of CNBC, you want to know which stock is up the most today? You're going to laugh about this. Bath and Body Works. Bed Bath and whatever it's called. Bath and Body Works. A mall store that sells hand soap, a mall company that sells hand soap is down 7% today on Monday. Why? Because Black Friday was good. Black Friday was good. This is the nature of the market for you. Bath and Body Works is the highest performing stock, is the biggest market mover because Black Friday was good. Like, do we realize the total nonsense? Like, that's a company that's in the mall. The malls are going down. The malls are going out of business, right? But it's up today. This is the same as 3 years ago when Tootsie Roll Industries was up because Halloween was coming up the next day. So you had Tootsie Roll Industries up 10% because Halloween was coming up the next day. I promise you this is a real thing. So this market is nonsense. It's just short-term trading. It's ridiculous. Don't do options. Don't do leverage. If you like the common, if you like the stock, just buy the stock. If you don't like the stock, just move away from the stock, and that's it, and go buy an index. But you know, I mean, anyways, it's whatever people want to do is fine. But it's just the market is so short term. So short term. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.